Hi, my name is Alex Carlucci with GustanShow.com. I'm going to talk to you about buying a house with a conventional or FHA. So when I sit down with my clients, I'm always thinking conventional first. I'm hoping we go conventional because in general it's a better deal. So if you got 780 credit scores, you got plenty of money in the bank, you got a nice steady W-2 job, you got low debt to income ratios, I'm thinking conventional because there's no upfront mortgage insurance premium, and it's generally that's the main reason, and it's generally just a better deal for the client who has low credit scores. You get a PMI factor that's less than FHA. So not only do you avoid the MIP up front, you get a lower PMI factor. Now, if you have low credit scores below 620, you can't go conventional. You have to go FHA. So keep that in mind. Below 620, we're always going FHA. Above 620, we're going conventional. Or you can go conventional. Now, if you're 622 credit score, your FHA rates can be better than your conventional rate. So we're going to want to go FHA possibly. Now, our Home Ready product offers a 620 credit score program with not such a bad rate, but it has income limits. So FHA and conventional are always, when a 620 credit score is always a decision to make, what's a better deal. Now, with FHA, you can go higher DTI on the back end. So there's a front end ratio and there's a back end ratio. The front end is your mortgage payment divided by your gross monthly income, and your back end is your mortgage payment plus your monthly debts divided by your gross monthly income. So FHA's ratios are 46.9 over 56.9. Conventional, you can do 49.9 over 49.9. So if you have no debt and you're trying to push the max mortgage, conventional might be the way to go because you can do a 49.9 front end. Now, it doesn't always approve you at that high DTI, but it possibly can. So you got to keep that in mind, that front end's higher on a conventional, but the back end's higher in FHA. So we're always deciding which one to go for you. If you have an option, we'll compare and contrast both options for you, what the MIP is, what the monthly mortgage insurance is, what the interest rate is, all that kind of stuff. Now, when it comes to conventional FHA, there's one big, huge difference that some of you have to go FHA because of this one reason. Let's say you're buying a $200,000 house and all you have is $7,000. Well, conventional, you can get 3% closing cost credit from the seller. FHA allows for 6%. Let's say the closing costs are $10,000. Well, you can only ask for 3%. 3% of $200,000 is $6,000. So now you're short $4,000 to close because you got the 3.5% down, but you don't have the $10,000 in closing costs, but you're only going to get 6% credited to you by the seller. Now FHA, you can get up to 6%, so therefore you can credit up to the $10,000 that you need. So now you can get in with your down payment money. So that's a main reason I take people who are eligible for both conventional and FHA sometimes just for that reason, because they don't have the money and they just can't get it any other way. So we have to get it through credits from the seller. So those are the main reasons what we do with FHA and conventional. If you get a referral eligible, we don't do conventional manuals, so we'll take you FHA and a manual underwrite. So there's another reason why we go FHA. That's basically the main skinny and what makes it decide FHA or conventional. If you want to watch some more videos on this, you can. It's all over GustanShow.com, or read the blogs at GustanShow.com at GUSTANCHO.com, or call me at 630-915-7550. Thank you.